You've got MMA leveraging partnerships, VERO restructuring,
SXTP writing on trial results, MKDW battling market forces.
and STSS in that high-stakes race to commercialize.
It really highlights how different they all are, despite all being, publicly traded stocks.
For anyone listening, it's such a clear illustration of why you need to look under the hood, right? Understand the business, the sector.
The specific catalysts, the risks.
Yeah.
It's not just about the ticker symbol.
And thinking bigger picture, it's a great reminder about diversification, isn't it? Across different types of companies and industries.
Couldn't agree more. Understanding what drives each specific stock partnerships, trial data, market trends is absolutely key.
So wrapping this up, this deep dive gives us a snapshot, a moment in time for MMA, VERO, SXTP, MKDW, and STSS.
Right. Based on that April 12th, 2025 data we had, the market moves fast, things change.
Absolutely. So this is based on estimates and available info at that point. Always verify current data.
Yes. Check platforms like Yahoo Finance, stockinvest.us. Do your own homework before making any decisions. Essential advice.
Definitely. And that brings us to our final thought for you, the listener. We've looked at companies in martial arts, med tech, pharma, auto electronics, all with very different stories right now.
A real mix.
So the question for you is, considering this diversity, what factors do you think will be the most critical for their future success? Is it the tech, the partnerships, market conditions, management execution?
And maybe just as important, how does what we discussed today fit with your own view of the market, your tolerance for risk, and ultimately your own investment strategy?
Yeah, definitely some food for thought there. We hope this dive gave you some valuable insights to chew on.
I am thrilled to offer you an opportunity to earn a significant return on your invested funds. If you loan me a $20,000 sum, I will personally ensure a 10% return every year, with the money automatically zelled back to you monthly for 2 years. This is a fantastic chance to grow your investment with minimal risk, as your funds will be returned every month without fail. When the Fear and Greed Index indicates extreme fear, it suggests that there's widespread pessimism and anxiety in the financial markets. This could be due to various factors like economic downturns, geopolitical tensions, or unexpected events that have caused investors to become increasingly cautious. During periods of extreme fear, market participants may withdraw their investments, leading to decreased market liquidity and potentially causing asset prices to fall significantly. Healthcare companies often move differently than the broader market. Shorting health companies specifically might not provide a sound hedge against overall market movements, since they tend to have their own dynamics and influences. So, using healthcare companies as a hedge might not yield as effective protection as expected. Shorting healthcare companies can be a risky endeavor. Here's why.